Faheema Adia from Momentum Securities joins us now for a full look into the day that was in markets. Faheema, thanks so much for your time this afternoon. So we got a bit of your analysis on budget. I'd like to get your analysis around trade internationally, right? Are we starting to see a rotation out of tech stocks, particularly in the US, as there are concerns around those overstretched valuations?
Yeah, it's been a bit of a volatile week in terms of the tech sector in Tolang. So we definitely are starting to see a bit of a rotation from some of the more, I would say, fully priced tech stocks. We recently did see SoftBank sell out of NVIDIA. But yeah, it is a bit mixed at the moment. I would say there are concerns in the market that it is starting to look like there may be a tech bubble, but then there are other parts of the market that are still saying that, this is justified given the massive growth expectations we're expected to see coming from AI going forward and, the cash flow generation. So I would say some of these valuations, even though they do look quite stretched, are justified given the growth expectations. But yes, there are concerns that things are looking a bit stretched at the moment, I'd say.
And concerns back at home are around consumer spending, right? Especially when it comes to discretionary spend. And we've seen it play out in our clothing retailers. Just last week, we got that downbeat result from TFG with earnings down over 21%. However, looking at Woolworths' update, things quite different. Yes, being supported by the food division. But what I did start seeing is a bit of a turnaround in the fashion division, and that a division where they've really been struggling as well. Just walk me through what you made of that update, that share price trading higher off the back of it.
Yeah, I agree. In Tolang, I think it was pretty well received by the market. So we saw the share price was up almost 8% after that 19-week trading uptick. And they did say, despite a tough retail environment, they are still seeing pretty decent sales growth coming from South Africa. And like you said, the food business continues to do well. But I think what's really looking better and got the market encouraged is the fact that we are seeing better growth now coming from the fashion, beauty, home business, and also Country Road Group, which was under a lot of pressure in the past. So we are starting to see some green shoots and sign of recovery there, and I think the market took that pretty well.
And I think we can all breathe a sigh of relief and say, finally, they have been, going through some problems down under. Just quickly before we get your stock pick, in the telco sector, Vodacom partnering up with Starlink. Faheema, given Starlink's pending approval here at home, could the deal help ease regulations? I know it's a partnership for the continent as a whole, but maybe we can focus at what could be at play or what could be at stake in South Africa.
Yeah, I think so. I think it is probably a step in the right direction in terms of getting these things over the line. We know that Musk has pushed very hard to get them through. So it would set a precedent, I think, for further deals to come through. And I do think it's favorable because it does cover areas that are more remote and that don't have cell phone reception or internet fiber lines. So it is more positive for overall the overall country and for businesses that are operating in these more remote areas and for the consumers out there. So one would think that if something is going to be supportive for the country's infrastructure, the regulation will be supportive as well going forward.
All right, let's get your stock pick. Where are you seeing opportunity at the moment?
So I'm seeing opportunity in a company called TJ Maxx Group companies. So it's actually referred to as TJX companies. It's a leading off-price apparel retailer in the US and also worldwide. It offers customer brand names at a discount of about 20 to 60% compared to the traditional retailer. And the business model just basically enables it to buy in bulk and then pass on that discount to the consumer. It's also pretty well protected against tariffs. So I just think that this business model is really well positioned to perform, given that the US consumer is under so much pressure. Looking at it from a valuation perspective, it is trading at a 12-month forward P of about 29 times, but I do believe that it is justified considering that it is the leading does have a leading position in this industry and pretty strong growth expectations going forward.
All right, let's leave it there. Faheema, thanks so much for your time and taking us through trade this evening. And that was Faheema Adia from Momentum Securities.